Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 13th, 2024. And there's something that happens in the cryptocurrency market about every 1600 days, okay? It happens about every 1600 days, and you can see it regularly on the charts. I'm going to show you that. And I'm also going to show you why that event is days away. All right? It may be hours away even. If that sounds interesting to you, then watch until the very end. Hope everyone's having a great weekend. Let's get let's get into it. So, last we spoke, we were talking about Bitcoin and how I'm expecting a positive weekend. The weekend candle close has yet to print. Okay, we have a few hours left, but I'm still expecting for us to near that 6,700 target for Bitcoin. Let's first look at that. Okay, here we are with Bitcoin, and as you can see, there's a very strong likelihood of our playing out this W pattern. Okay, when you see a W pattern with the right vertex, right, to two vertices, the right vertex lower than the left, this is typically an indication on a higher time frame. So let's jump to the daily, of a confirmed bullish divergence, and that's exactly what we have here. Okay, so here let's clean this up. Let me show you this again on the daily. You can see, you typically see it like this, okay, where you have a W reversal, right, which this is, two vertices, right, a right and a left, obviously, and on your momentum indicator, you have evidence of confirmed bullish divergence. Right here, you have a lower low on the price, and on, excuse me, on the momentum indicator, you have a higher low in the right vertex. Do you see? So this is what we call confirmed bullish divergence, confirmed because the K and D lines have crossed. So this is playing out, and this should continue to play out. So this is another reason I didn't necessarily mention last episode, but this is another reason. It's very likely we hit our next logical resistance, which is at 67K. And if you zoom out, you'll see why it's at 67K. I don't want to just say numbers. I want to show you why this is a very clear, logical, common sense resistance. First and foremost, you have this descending broadening wedge of 6 months that you've been in, right? And so you're essentially just hitting the top of that descending broadening wedge. Next, you have the midline of this 2+ year channel that Bitcoin's been in. You're hitting that. So there's a double resistance here at around 67K. Very likely that Bitcoin find resistance there. Very unlikely that we rip straight through. So on the smaller time frames, you can see that this weekend, Bitcoin, let's go on the hourly, because it's a lot easier to see what this pattern is. Bitcoin has been putting in what we call an intra-wave correction. Okay, so this is the wave, this is the momentum, this is the trend. The trend is obviously positive, right? All these green candles in succession, that's a positive trend. That's also indicative of what we call an impulse in Elliott wave theory. This is an interruption of that trend, but it's not an interruption insofar as it's a retracement. It's an intra-wave correction, meaning within this correction, you get some sort of intra-wave sort of consolidations. That's all this is. And if you look at this, it seems like it's a clean ABC correction, WXY. It's a flat correction. That's all you got this weekend. Down, back up again. So it's not really much of anything, because you went down, back up where you came from, okay? And here too, on the hourly time frame, actually let's go on the 4-hourly time frame, see if we can't see any evidence So on the 4-hourly time frame, if this 4-hourly candle closes and we break this area right here, this resistance of 62.8, we will have a bullish divergence. Will we? No, not necessarily. Not necessarily. Never mind. Okay, anyway, I made the previous point, which held. And so I still expect for Bitcoin to continue to the 67K target, okay? And then if you didn't catch the previous episode, my trading thesis is this. That Bitcoin continue to 67K, hit this by Monday, and some point on Monday we start going sideways and then start coming back down again. Okay, why back down? Well, because this is staunch resistance for the reasons I stated a few minutes ago, and because when you trade on the weekends, expect for whatever positive gains you made or negative gains you made to be retraced at some point in time. So if we do indeed spend the rest of Sunday going up, we just have a few hours left, going up to this target, do expect for those gains to be given back. We typically see this. This is very common. So it's basically a wash trade. Reason being, the impetus for this move isn't real, as they would say, because the traditional markets, the US dollar currency index, isn't trading. And so whatever happened here has to be retraced upon because it can't stick. It can't hold. Okay, that's not always true for Bitcoin, but more often than not it is. Okay, it's less true for altcoins, which we'll talk about in just a moment, and I'm going to give you a few examples of that. Okay, so the other reason we're likely coming back to this region is if this is indeed an impulse, this is an intra-wave correction, let's say just, back of the napkin, Elliott wave count. This is wave 1, wave 2, wave 3, wave 4. You get a wave 5. That's a bit of an extension. You don't actually, let's say this is an extended wave 5, which, okay, let's actually count this because I may be inclined to do so. Let's count this properly. Guys, if you're getting value, please like, share, and subscribe. Consider buying me a coffee at the pinned comment below. Okay, this is clearly a wave 1, wave 2 situation. I don't have to measure it. It looks like it's between 382 and 618. This may be a wave 4 right here. Okay, may very well be a wave 4, and then we get our wave 5. Let's measure that with our Fibonacci extension tool and see if we're getting the proper or the likely extensions. Let's see, wave 1, wave 2. So wave 2, wave 3, which typically comes to between 1618 and 2, extended to the 2618. So at this point, wave 3 is already extended. If this indeed is an impulse, wave 3 is already extended. What you may see is wave 3 end up here, and then once we get to this resistance, a lot of consolidation, and then a pop-up. So we may continue. This is very likely based off of this. Okay, I'm going to try and be short with this. I just measured this purported impulse, okay? And like I said, wave 1 you typically see, wave 2 you typically see retrace between the 382 and the 618. That they always, wave 2 has to retrace between the 382 and the 618 of wave 1. We have that here. I don't have to measure it. I can eyeball it, okay? Wave 3 typically comes to at least the 1618 2 Fibonacci extension. If it extends beyond the 2 Fibonacci extension of wave 1, then that counts as an extended wave 3, okay? So we are technically already in an extended wave 3 because, as you saw, we're past the 2 Fibonacci extension of wave 1 at this point here. So this can't be wave 4. This still has to be wave 3. So wave 3 should continue, which is again another reason why this is likely to continue. This pattern is likely to pop up and keep going up. The trend is your friend until the end, and the trend hasn't ended on this small time frame. So do expect in Bitcoin for the trend to continue to these next logical resistances. Now, what I see, once you get to the top resistance of this descending broadening wedge of 6+ months, then we start printing a wave 4, which is your typical intra-wave correction, some sideways price action. You typically get some sort of flat correction, or sometimes a triangle, right? Some whatever sideways stuff. Okay, some people are going to think that's it and we're going down. No, not just yet, because technically, mathematically speaking, that's going to be wave 4. So whatever happens, once we get to around 66, low 66s, and we go sideways, expect another leg up. Not that big of a leg up, but another small leg up. Don't go short yet if you're keen on going short at the top of moves. Do expect another small leg up, and I think we get our massive sort of rejection, or strong rejection, at 68 or something like that. Then this entire impulse starts retracing upon itself, and we take the Fibonacci retracement tool for that, and we can see that a retracement like this would be very, very key, or it would make sense, right? Because this is a nice W structure. This would be a breakout. This would be a retracement back to the neckline. I think a retracement back down to about 63 is likely. So again, that's the wash trade. That's whatever happened on the weekend doesn't really happen, right? So again, a lot of things corroborate our read of are continuing to go up for the remaining hours of this weekend, and then coming back down. And how do we come back down? Well, we're going to come back down within the week, right? Because remember, the 17th is a full moon, and historically, by the numbers, statistically, full moons represent local market bottoms. So do expect for Bitcoin to start this 3-wave declension retracement towards the beginning of next week, and then finding some sort of finality on Thursday or Friday. And then the last thing I'm going to say about this is, mind you, the time component, right? Any proper wave 1 impulse has I'm going to rephrase that. The first wave 1 impulse of a move of an asset is typically time the up move and the down move are similar in time. The time factors are similar. So this up move will have taken about 5 days. As you can see here, thus far, we've been going up in Bitcoin for 3 days and 8 hours. Add a few hours here, you're about 4 days, right? 4 days and some, right? Let's say 4 days. Take then the declension from Monday, add 4 days to that, then you get to Thursday, Friday, the full moon, your local market bottom. It works in so many ways. I do expect for that read on the market to play out for all of the confluence that I've just discussed, right? Everything's pointing to that, right? This breaking out just as a pattern, right? The height of this the height of this W pattern breaking out. What's the target here? Let's just take the target real quick. So if this is a nice W pattern, this is the neckline of it, and we're at the neckline. The height superimposed from the site of breakout. gives us a target of exactly 67.8 68, right? That's the same target I got from doing this some other way, right? Look, it's literally, I mean, I just took the pattern target in front of you. I haven't done that before. And look, it hit exactly where I already had my alarm. And I already figured that out some other way. Again, that's what we call confluence. 67.8, I think 68K thereabouts is our ultimate target for this impulse, okay? Now, Bitcoin may very well give us this move to the upside. Let's clean this up. And again, if you're getting value, if you're finding some sort of benefit in this analysis, definitely like the video, subscribe. If you're not subscribed, consider buying me a copy at the pinned comment below. This is all in all 14-15% move that we will have put in, and from where we're at right now, that is an additional 8%, okay? In the same amount of time that Bitcoin's doing that, we can expect for altcoins to do much more, okay? And this is what I started the video talking about, okay? Every 1,600 days, the cryptocurrency market does something, okay? And it does something that is the cause of all of its fame, all of its popularity. It goes crazy like no stocks could ever think of going. Crazy like, you know, getting people who have no business trading and have no interest in it, interested in it, you know? So this happens every 1,600 days. Everything just runs to the upside. And it's almost clockwork. But the issue with saying that is this. There's not enough data to say this happens. Like your sample size is too small to say this always happens. No, it's only happened twice before in the altcoin market. Now we're talking about altcoins, okay? So as you can see on this total 2 chart, what's the total 2? The crypto total market cap excluding Bitcoin. So everything in cryptocurrency minus Bitcoin, you get this chart. You can find it on TradingView. And as you can see here, the first time we did this crazy run up was in November of 2015, okay? And approximately 1,600 days later, a little more than 4 years, that works out to a bit more than 4 years, we started doing it again. Now, we did it again, but less crazy, right? To a lesser extent, as you can see here, the first time was insane. The second time was more muted. The second time wasn't a proper bull run. It was a bull run in that you're making higher highs and higher lows. Prices are going up, but as you can see very clearly, this is an impulse. This is an up move within a correction. Okay? This is an up move within a correction. And so here you have, sorry. No, this is an impulse. It's just an impulse. This is a proper impulse. This is an impulse of a lesser degree. Okay, so this is, if you're so what does that mean? That means this is an impulse, and then if you're thinking of Elliott waves as Russian dolls, this is a smaller Russian doll. Okay, it's still a Russian doll, but it's a smaller Russian doll. It fits within this larger Russian doll. That's all that is. Okay, once you get back to this degree, then you get the magnitude of this impulse, which we haven't had. Okay, so this happened twice before, and when I take my measurement tool, you can see that from November 2015 to March 2020, that's approximately 1,600 days. Okay, approximately 1,600 days. And from March 2020 to present day, it's approximately 1,600 plus days. Okay? So we have 1600-day cycles. This is where people get the 4-year cycle. Again, the end value is too small to say this always will happen, so be very careful. What I really want to show you is this, though. Look at this. This was a smaller impulse of a smaller degree, okay? After we put in this move right here, we retraced. This whole thing is a consolidation. This is an accumulation. All the sellers were gone. Buyers reaccumulate, mark the price back up. That's actually your first wave. Actually started in October of 23. And ever since October of 23, and again, this isn't for every altcoin. This is just if you take all the altcoins, put them together. So it's only it's skewed by the larger market cap assets. So you have a first wave here, and you have a second wave there. What did I say a few minutes back about initial waves, or wave one, Elliott waves one? They typically show a time component on the way up and the way down that are equal or comparable. Okay, so if you take your time measure from the bottom of this wave to the top, you have 147 days. Okay, now if you take your time measurement from the top of this wave to the bottom, you have 147 days. This is likely very good evidence to say whatever happened here is a wave one, wave two situation. What you have here is a subsequent accumulation, or a consolidation after the big drawdown, and a preparation for a move back up. That preparation for a move back up on the higher time frame is very likely to be your next 1600-day impulse. Look at this: impulse, retracement, impulse, retracement, consolidation, impulse, retracement, consolidation. The target is up here. As you can see, there's a clear resistance up there. Before you get this consolidation retracement, you must hit this target up here. And what we are on the precipice of, now we jump down to the smaller time frames, is this move right here. Okay, so again, likely going up here. That's your target, at least on, in the shorter time frame. But first, you have resistance here very clearly, right? And then a retracement. Pop up, probably going to have some wave 4, and that's going to be the end of the move here. I don't think that's the end of the bull run per se, but however long this takes, expect the retracement to take that amount of time and then add a little time for another consolidation. I hope this all makes sense. All in all, you should expect in the next coming days this 40% move to this next logical resistance in the cryptocurrency space in most altcoins. At least 40%. If on average you're getting 40% on this total too, that means some assets are going to give you 100, 150%. Others are going to give you 50, 60%. Others are going to give you 30-something%. So I hope you understand. This is what I'm seeing in the charts. That next 1600-day move is here, according to this total true chart. Guys, I hope that was helpful. Hope that was useful. Like, share, and subscribe if you got value, and I'll see you next time. Take care. Bye.